happy belated birthday.
Thank you, my friend. Thank you. Thank you. Another year older, but still feeling great as always. I appreciate that.
Another year wiser.
Yes, sir. I'm pretty sure sooner or later some of these grades will start to really show. But until then, I'll keep holding on.
They just keep coming.
Right?
So what's going on in the real estate world today?
Oh, man. Well, we're in a new month of May, of course. And a lot of talk that, we've been hearing from everywhere. A lot of consumers have been worried in different areas. What does recession mean if there is one that happens to come, whether mild or not mild, whatever the case? No one really knows. Everyone can speculate. But historically, in the terms of a recession doesn't necessarily mean falling home prices. And by the numbers, since 1980, prices have appreciated in 4 of the last 6 recessions. People can hold strong and on their thought and belief that, their homes will maintain value and even increase, if a recession does happen to come. Kevin, something you can definitely speak to for sure is one thing about a recession usually creates falling mortgage rates. Lower interest rates are usually offered, from what I know in my experience, as an incentive for people to spend money and help stimulate the economy. Is that generally what you guys see as well?
Absolutely. And the recession is kind of what we've been waiting for. In the mortgage world, the enemy of mortgage rates is inflation. It's all we've heard about on the news. The same things that make food more expensive, the products we buy at Target, Walmart, wherever we shop, as the same things that make that more expensive also makes mortgages more expensive. And we have been waiting and watching and anxious for May to come because mid-May, we believe that we're going to start to see some improvements to the inflation and hence mortgage rates. I am sharing a window here. A big portion of inflation are shelter costs. And shelter costs are a lagging indicator, meaning it takes time. So shelter costs peaked and have already started to come down. And as you can see, the shelter being reported in the CPI, the Consumer Price Index, the measure of inflation, it happens at a lag, basically a year lag. So May, the inflation reports were expecting some really positive news because the decreasing shelter costs are now finally going to start to show. So it's April of 2022 is when shelter costs started going down, rents in particular. So now we are expecting the April 2023 inflation report to show that. And that would be fantastic for inflation, which would be fantastic for mortgage rates. So this chart here shows shelter cost lagging year over year. The purple line is the rental costs, apartment list rent year over year change. And the bluish line there is the overall shelter costs. So as you can see, the shelter costs, the rentals, the purple line ramped way, way up there for a while and is coming back down to more reasonable levels. That's what we're expecting to see coming out this month. Now, the Fed meets this week. You all are going to hear the Fed is raising rates again. Very likely that they are. Probably the last time that they do it for a while. We may even start to see some lowering. But the Fed is battling inflation. The Fed probably shouldn't be raising rates because inflation is going to be coming down. The Fed always overcorrects, but it's what they're going to do. So we are expecting some pretty solid inflation results. So we are very hopeful over the next few months we're going to see rates coming back down. Another indicator of recession is this here. So this is talking about an opportunity for cash out refinances for folks, but it's showing what is happening on the personal savings rate on the top. So as you can see, pre-pandemic, the pandemic is that white line.
Okay.
Savings rates were pretty stable. Once the pandemic hit, savings rates skyrocketed once the pandemic hit because of all the stimulus. Plus, people were at home. They didn't have any place to go to spend money.
Right.
Then it started to come back down. You have a couple blips here of some more stimulus money. But over time, since the pandemic, people have been spending more, saving less.
Mm-hmm.
And the second on the bottom here shows credit card balances. So throughout the pre-pandemic, we were on a steady increase. During the pandemic, people had more money. They weren't spending. Balances went down. And now look, it's gone up hugely, the amount people have on credit card balances. So right now, people have a lot more debt and a lot more savings. The average car payment has gone up to about $800 a month. And 17% of car payments are over $1,000 a month. And that's kind of understating how much debt that really is, because most of those are pushed out to a 6-year term, sometimes even more. So people are getting stretched right now. And as they're stretched and they spend less, that's really going to push us towards that recession, or at least slow down the economy and slow down that inflation. So there's a lot going on right now that are good indicators for mortgage rates. We are showing expectations later this year. We'll be comfortably into the 5s is kind of the expectation. And the housing surveys all say and all indicate that when things get below 5.5, again, on the average 30-year fixed, is when most people say, I'm going to get back in the market. Like most sellers are willing to consider selling, and a lot of buyers who've been on the sidelines are willing to consider buying. Once we break that mid-5s, once we hit mid-5s and low 5s, that's when things are really going to take off. So hopefully that'll convince some sellers to sell, but if there's more buyers than sellers, that's still going to be price pressure. So it's all going to be about supply once it gets to that point.
Yeah, and speaking of supply, that kind of brings us right into the very next point. Just wanted to talk about some of the inventory that we have as of today in the greater Hampton Roads area when it comes to single-family townhomes and condos. As of today, we have 2,667 active listings. That's only down 11 from generally the same point back in April. So that's not terrible. Just having a 11 unit difference. Months of available inventory as of right now, we're still between 1 and 2, which still indicates a very strong seller's market. Like Kevin said, if we get more inventory to the market to go along with that buyer demand, that'll help bring things out beautifully. But if we don't, then that's going to definitely create that that buyer pressure, that seller pressure, where you have those major bidding wars like we're seeing all over the place happen right now. And one last fact, as of today, May 2nd, we do have only 103 new listings that came to the market in the first 2 days. Now, I understand it's Monday, Tuesday, so that's usually not the day people want to list. They generally list more towards the end of the week or the weekend when people are available to see the homes. But still, we're still way behind what we need. We'll just look at historically 2022. This month produced 3,600 plus, new and active listings. We definitely need to ramp up, almost double what we've done just this far. So moral of the story is, looks like interest rates will be coming down in the future, hopefully more inventory. So it will create the perfect storm at some point. People just never know exactly when. So the best thing to do is stay tuned in to us here. That way we can keep you up to date with the best and greatest information. Or if you want a more personal touch, you can always reach out to Kevin directly, and he'll be sure to fill you in. Kevin, what's the best way for them to get in contact with you?
Give me a shout at the office, 757-645-0196, or just visit me at loanswithkevin.com.
Awesome. And you can reach me directly, and we can talk real estate and just bounce some ideas off as well at 757-871-4167. or use that Linktree link, you can go ahead and set up a 30-minute consultation or free appointment with me at any time of your choice. Well, Kevin, that's all I had for this week, buddy.
Sweet. Have a great birthday week, my friend.
Hey, thank you so much. Take care.